Sweet. Yeah, I guess before you go through your presentation, you could give a brief kind of background of yourself. That'd be great.
Yeah, for sure. Hey guys, I'm Cindy. I'm one of the co-founders of Drift. Drift is a decentralized futures exchange on Solana. So our first product is building perpetual swaps, similar to perpetual swaps you see in Binance, FTX. Yeah, let me know if you need a primer on them. But we're basically building decentralized derivatives, and we're using a novel dynamic AMM mechanism. On myself, I actually started in the crypto space in 2016. So I started trading in the space. I was an exchange student in Korea at the time, and noticed some huge spreads between US and Korean markets for Bitcoin prices. I think it was like a 30% gap between the two. And we had a Korean and an American bank account. And then I just did the trade where you bought Bitcoin in the US, sold it in Korea, and then shuffled that trade again. And that led me to really fall in love with crypto. Found out that there were a bunch more inefficiencies out there, and started automating that strategy, as well as exploring different types of on-chain strategies to trade. So after that, started running a small prop fund, just trading these type of strategies. And then over the course of last year, got pretty involved in DeFi, helped a couple of decentralized derivatives projects on Ethereum pop off. And then this year saw Solana's rise and decided that Solana would be, would be fast enough and have a good enough ecosystem to build a composable perp exchange on. So yeah, that's sort of where we're at. We started this company around 6 months ago, and we just launched on mainnet this week. So you guys can test it out. And right now it's gated by an NFT, but happy to send it out to some of you guys.
Sure. Great. Thanks so much. Intro. Yeah, you probably just hop into the presentation and then leave a couple minutes for Q&A, I think. That works for you.
Yeah, sounds good. Let me just get it open. You guys see?
Yep.
Okay, cool. So yeah, just I think as I mentioned, Drift, we're building perpetual swaps on Solana. Are you guys familiar with perpetual swaps, or should I give a quick primer on what they are?
You can give a quick primer, just for some people who are not that familiar.
Yeah, for sure. So I think perpetual swaps are a very crypto native invention. They came about in around 2016, 2017, and they were actually invented by BitMEX. So if you're familiar with the contract for difference, it's similar, except there's no actual cash exchanged with a perpetual swap. It's essentially a futures contract that never expires, and you don't need a single counterparty. You can do it within exchange, and the mechanism that keeps this perpetual swap in line with Oracle prices, which is really like the bane of the perpetual swap's existence, needing an Oracle that the swap tracks. So an Oracle might be the price feed of Bitcoins on Chainlink, and or a basket of spot prices, and the contract itself continues tracking the Oracle prices. So the mechanism that keeps these two in line is called the funding rate, and the funding rate essentially is charged to participants who are on the wrong side or the aggressive side of the order of the contract. So an example is if the mark price of the perpetual swap is, let's say, of Bitcoin perpetuals is like 61,000, and the actual Oracle price is 60,000. that $1,000 difference is sort of amortized over a period of 24 hours. And this is quite flexible. Some contracts do like continuous funding, some do 8 hours. But that funding rate is paid by people who are long the contract because the price is above the oracle. So sort of like think about it like a penalty for being against the oracle. At the same time, if the contract is trading at 59,000, you have this thing called a negative funding rate, where you then have to pay out. Well, if you're long, you have to pay out positions, pay out a funding rate to shorts. So what this does is this incentivizes people who are disincentivizes arbitrageurs to come in and correct the trade, because they know that they can collect that funding rate as a reward for making the markets more in line with each other. So yeah, that's sort of a quick primer on perpetual swaps. I don't know if you guys have any questions. I'll just pause here. Cool. I think, I'm sure you guys get it, and we can have a Q&A at the end. So in terms of background, I gave a quick background on myself earlier, but I can also, expand on my team and who we are. So we're a team of 4 co-founders, and we come from a pretty diverse range of backgrounds: crypto native, traditional finance, software engineering, and Web2, as well as the legal world. So our head of research comes from a quant trading background. Our head of tech comes from Amazon, a senior software engineer position there. And our chief of operations comes from a legal world, also ran the hedge fund together with him that I mentioned earlier. And yeah, we came together a couple months ago, started building this project out, and we're a team of 5 now. So we have a front-end engineer in Australia, and we're hiring pretty aggressively. So this is an opportunity to reach out if you want to get involved too. So founding story wise, I think we really just we were jamming together and ideas came together and decided that we wanted to do options early on, but we decided that perpetual swaps were a lot more liquid, also easier to implement than options, given how much bigger of a market it is. Always easier to start with a Delta One product instead of a convex product. So we decided to focus on building out the margining engine of a derivative, which we can use to expand to other types of derivatives in the future, such as things like power perps, so like perps that track the square root of the underlying, or different things like NFT floor perps. So those are some innovations that we want to build, but we want to start with a simple sort of like Delta One product base. And it's also the most liquid and most traded product in crypto. I think perps see around $200 billion of volume today in total. Yeah, so I think this part also goes into why we decided to build perps. We think that perps are the killer product in crypto. It's the easiest way to get exposure to an asset speculatively. It's also the easiest way to hedge against other assets, and we think that perps composability makes it really easy to integrate on chain. So the elegance of perps means that you have an oracle and you can build whatever market on top of that, right? So you have an oracle for anything, like let's say the rate of COVID vaccinations. You can actually build a financial market on top of that, as long as the data is continuous, and it doesn't have to be like a binary. It doesn't have to be a binary contract. So yeah, that's the beauty of perps. And as long as you have incentives to arbitrage the market, you can get exposure to the underlying on leverage without having to post your full collateral. So it's really capital efficient, and I think a good way to a good way to incentivize all participants of a perp market. And that goes into why build it on chain, right? There's a ton of perps out there. The biggest perps right now are in Binance, FTX, major centralized exchanges. And I think this just goes back into why we care about decentralization in the first place. We think that it's ironic that the most liquid contracts in crypto are hosted in a centralized context where every single participant has to trust a centralized exchange to hold the funds, to make sure that pricing is transparent and they're not actually trading against client orders. Yeah, so I think there's been a lot of cases where centralized exchanges have been accused of front running their customer orders or running a B-book against customers to turn a profit. So I think an on-chain solution to this, where everything from the matching engine to the way the price discovery works, the way that funds are held, should be held off-chain, should be held on-chain on a smart contract, to ensure that participants can actually fully participate in the crypto world, where they can hold on to their own funds and trade perps at the same time. And we think that the current alternatives just aren't quite there yet, and we're looking to bring perps on chain to the next level. And that leads us to why we're built on Solana. So there are a couple of on-chain perps today, namely DYDX and perp, and I think perp also did a presentation with you guys. We love those guys. We our core innovation, the Dynamic AMM, DAM for short, is innovated on perps VMM. So really thankful for those guys and what they've brought to the market. At the same time, we think that there's some advantages to being built on a layer 1, as opposed to an isolated layer 2. And that's why we built on Solana, because of 3 reasons mainly. Number 1, that we think that the UX of transferring funds between bridges is clunky. So having to transfer funds between your Ethereum wallet to Optimism, to Starkware, to Arbitrum gets annoying at times, and we think that users still don't want to pay $200 to $300 just to get onboarded onto a layer 2, and having to swap funds in between just gets clunky, and that makes it difficult from a composability point of view, where you can't build perps on a layer 2 and expect it to integrate with like an options platform built on layer 1 or another layer 2. So you have these products that are kind of isolated against each other, and we think that it's the nature of DeFi to have products that work with each other. That creates a new kind of emergent form, right? The second is, at the end of the day, the settlement of these layer 2s is still limited by the capacity of layer 1 and the speed of layer 1. And Solana still solves a lot of these issues by being 10 times more faster with a 400 millisecond block time. So we wanted a solution that was native to the layer 1. And thirdly, I think we just care about having an ecosystem of products around us. So for instance, we're working with lending protocols where unused deposits in our vaults can be deposited into a lending platform outside in Solana, and users who are trading on our platform can still earn yield while they're trading, while they have money parked in us. And that's only possible in an ecosystem where you have multiple dApps thriving. And that's also one of the reasons that we were attracted to Solana in the first place in February, March this year, where we saw just a bunch of talented developers flocking into the ecosystem, and we knew that was the start of a budding ecosystem. Solana was also like less than $20 at the time, so pretty wild times. So yeah, I think that's sort of a background on the market opportunity, why perps are important, and then why we decided to build in Solana. And now I can give a quick introduction on us and how we work. So I mentioned briefly that we use a dynamic AMM, DAM for short, and I can quickly talk through our architecture. So I mean, this probably is not too relevant. It's just how the on-chain program is structured. So we have an external Oracle program. We actually use Pyth right now. They're working with a bunch of major price providers and trading firms in the space to provide tight quotes for an Oracle price. And their mantra is, really high frequency. We're also looking at integrating with Chainlink for a couple of markets that they don't have. So we have, an array of markets. We have primarily like a clearinghouse contract that holds the user account, markets account, and also the AMM account. So where the price is at the moment determined by the AMM. And yeah, everything settles back to the Oracle price. So users hold on to their own funds, and the admin only controls really like upgrades to the contract that we have in the clearinghouse. Anyways, this is going too deep in the weeds, but just wanted to give you guys an idea. And so with the virtual dynamic virtual AMM, if you guys aren't too familiar with virtual AMMs, I can also give a quick intro on them. But let me know if you've already seen Perpetual's presentation and don't need another intro on virtual AMMs.
Yeah, I think we got some background on like virtual AMM, so probably just like diving into how this is a bit different.
Yeah, perfect.
Works is good.
Yeah, sounds good. So our dynamic AMM has two distinct features from a virtual AMM, from a pure virtual AMM. Number one, and the features, I think we believe that it solves a lot of the slippage issues faced by a virtual AMM. So how we've built this is to enable traders to have the best prices on the market, as well as traders to have low slippage and to actually use a portion of our platform fees to readjust the curve. So these two mechanisms we call repegging and adjustable K. So our repegging mechanism, essentially, let's say, imagine you initialize this market when Solana is at $50. Solana shoots all the way up to, and you have like a set XY value in K there, and we call it and their balance, and we have a peg multiplier that multiplies it to the price of $50, and then the price shoots up to $100, right? So at that point, your slippage is much higher per unit of trade compared to where you started at $50 because you're trading at the far end of the curve, right? So in order to prevent this slippage from being so high at $100, you really want to move the curve or repeg the curve such that the most liquid part of the curve is where you're trading, right? Unfortunately, this doesn't come for free. You have positions that are open on the VAMM, and existing positions might be negatively impacted if you repeg the curve to a certain point where the Oracle price is, right? So it costs money to do. So what our system does, and we call this drift cover, is that we keep track of the cumulative slippage held by our platform as protocol revenue to pay back traders by readjusting the curve and repegging the curve to current Oracle prices when Oracle prices get too high. So we have a target slippage, and if this target slippage gets too out of hand, we readjust the curve to where Oracle prices are. And the impact of this mechanism means that early traders get a better close price, and they have lower slippage when they're exiting positions. And new traders also get better slippage when they're entering new positions. So this leads, and this is a pretty novel mechanism because if you're a centralized exchange, a lot of your spreads are eventually taken up by market makers, and that gives you the worst price. But on our platform, you actually get paid and you benefit from protocol fees directly by being a trader on a platform. So over time, you're going to have on average the best prices on the market. So that's really, one of the core innovations that we feel strongly about. The other thing that we do is also an adaptable K. So within the virtual X times Y equals to K balance, we look to adjust the K formulaically whenever open interest grows. So not just with the repegging issues, it sells prices going further away from Oracle price. With K, it solves the problem of growing open interest, causing and higher trade sizes, causing high slippage to the AMM. So as open interest grows and as the number of participants grows, whenever our long short balance delta hits 0 or is balanced, what we do is we actually adapt K to sort of a rolling count of open interest and trading size. So what this does is even if the market grows and OI grows, we still can provide a pretty consistent slippage throughout. So yeah, that's a primer on how the dynamic AMM works. And yeah, I guess why we decided to build dynamic AMM again compared to an order book. We think that order books are reliant on external market makers in a way that dynamic AMMs only require traders to transact against each other, right? So it's a more composed and put together product that doesn't rely on a market maker sort of extracting spreads from the market. The trading is entirely slippage based and entirely price action based. So we think it's really like the purest form of a market. And when we add on these dynamic adjustments, repegging, adjustable K, we think that it can provide much more competitive pricing and at better computation than order books. So during periods like, let's say the Solana outage about a month and a half ago, order books would have performed much worse than dynamic AMMs because you can pull liquidity anytime from order books. So whereas dynamic AMMs actually require the trades to go through in order to get the prices to a certain level. So in a way, dynamic AMMs or VMMs are much more robust from a price discovery and also prices dependence of price, path dependence of prices. So in cases where you have really intense loads on the ecosystem on Solana, the dynamic AMM actually outperforms. And we think that, what we're planning to do is, a lot of questions that we get asked is like, when limit orders, when stop losses. And it's actually not impossible to do with a dynamic AMM. So we're looking at our next version to add stop losses and limit stop losses, take profits, and limit orders within the dynamic AMM itself. So, we can have it as a limit order queue that gets filled when the dynamic AMM goes to that price, or we can also have PDP transactions happen at the same time as dynamic, as the VMM transacts against you. So we think that a dynamic AMM bootstrapped by an order book tied around it is the most crypto native and superior approach to trading perps. Yeah, so this is pretty much the end. Our alpha mainnet is now live. And if you guys want to try it out, I'm happy to share this alpha ticket with you and try it out. Right now, the deposit limit is only 1K per wallet. And we've set it so that it's purely to test out the system. And so we really value feedback at this stage. And then by the time of our actual launch, we'll increase this to a much higher deposit limit. Cool. And if you guys have any questions, let me know and we can jump right into it.
Yeah, people feel free to either like message in the chat or raise your hand. I mean, one question I have is you kind of go into like if you would, let's say you decide to build this on just base layer Ethereum, what are some aspects of the your kind of like AMM system that you wouldn't be able to do on Ethereum? Is it because you also you said you had the order book aspect as well?
Yeah, I think that the AMM is doable on Ethereum. Like it's not impossible to do.
Yeah.
The only thing is, I guess you would still it would be much slower. On Solana, you can settle things on chain, yeah, pretty much immediately. But on Ethereum, it's still a lot slower. So things like calculating what we need to repeg for Dynamic A, that's a lot easier to do on Solana compared to Ethereum.
Yeah,
So yeah, it's definitely not impossible to do.
that makes sense. Someone had a question in the chat. Any advantage over Fodler type of protocol for leverage trading? The cost is much cheaper compared to funding, right?
Oh, is this FODL?
I guess. Yeah, FOD. Yeah.
Yeah, I'm not super familiar with how they do leverage trading, so yeah, I'm not too sure there. I can look into it later, but I'm not really familiar.
I actually have another question. So, I mean, there's like one disadvantage though to building on Solana is that a lot of tokens that people trade are like ERC20s.
Yeah.
So are you guys thinking about maybe like obviously you're not gonna have a native bridge into the protocol, but kind of connecting with the existing Solana Ethereum bridges or something in a like a more user-friendly way?
Yeah, definitely. So one thing that we want to do that would be really good from a UX perspective is host a version or host a wormhole on our page, and essentially have you be able to connect your MetaMask wallet, deposit some ETH to get Solana, and then do the conversion from Solana to USDC, which is the currency you accept for deposits.
Mhm.
So yeah, that's sort of I think would be a good way to get people to actually move from Ethereum to Solana. Yeah, I think there's other bridges as well, but the problem is like users don't actually know exactly how to use these bridges, right? Like there's so many bridges out there. Like how do you know? It's like, oh, I need to deposit ETH to Solana on all bridges, but I can't do it on this other one. So yeah, I think that's a really good point and something that we'll prioritize over the next couple of weeks as we onboard more users.
Yeah, I mean, I think it also makes sense for different protocols to kind of take a stance on like on what bridge they think is better,
Yep.
because at least it's like a bit of confidence. Because some of these bridges to Solana are a bit sus, like at least in my opinion that I've used before. So yeah, makes sense to me.
Yep.
So a lot of the like users that are on Solana are very different users from like Ethereum users.
Yep.
Because most Solana users are like priced out if they're smaller.
Mhm.
Have you found that to be the case for the people that are testing out Drift? And then another thing is like we talked about perp protocol earlier, and we've looked at some other ones. And the only one that I'm familiar with on Solana is Mango Markets.
Yep.
But they're an order book model, right?
That's right. Yep.
So they're like a competitor to you guys.
Yeah.
Yeah.
Sorry, what was your first question again? I think I missed that.
Which is like the users that
Oh yeah, the users, yeah.
you guys have had with Drift, are they more like smaller scale users, or have you been seeing like I guess people that like use Ethereum come over and try to test out Drift?
That's a good question. I think a lot of Solana's user base actually comes from FTX, surprisingly. Just because FTX is like a de facto bridge for Solana, right? It's one of the only places you can withdraw like SPL tokens. So and the reason also that we decided to build in Solana was because we believe that we would see more trader type profiles on Solana because of its closeness to FTX compared to like ETH layer 2, right? Where I think you see more yield farmers, pure DEX traders. So I think it is quite a different audience. I think the Solana audience comes a lot more from not DeFi native audience, but from like FTX native trader type. So we think that this group is a lot more familiar with centralized trading and are looking for a way to, we're really targeting the subset of people who come from those exchanges and want a decentralized experience. So from our experience and user interviews, we actually found, I think, the traders on our platform are very different from the ones that let's say trade on perp or DYDX. At the same time, the trading firms that make up a big portion of volume on both are quite similar across I guess Solana and ETH. But from a retail perspective, we think that they're actually coming from quite a different source. Instead of like bridging funds over from Ethereum, it's really like exiting from an exchange. And yeah, to your second question about Mango, yeah, you're right. I wouldn't call him a competitor at this stage. I mean, we're all kind of in the space together, and we're actually like pretty good friends with them. So yeah, we really like what the guys are doing too. They've launched their product a while ago, and just recently, I think they started with a leverage borrow lending, and then got to perps recently. So yeah, I think they're focusing on order books. We're focusing more on BMM and DMM pricing. So we think that ultimately you'll see subsets of users who want to use elements of both. So yeah, it's still a small space at the moment.
Because people are like you're kind of trained directly with this with the virtual AMM. Are you kind of thinking about incentivizing liquidity in a different way than a normal like order book based or just like normal like AMM based exchange might?
Yeah. So we won't be like deposit like half SOL, half USDC into this pool and provide liquidity there. Since a virtual AMM doesn't require external liquidity besides the people who are trading, what we do require are arbitrageurs. So we do need arbitrageurs to keep prices in line, in our mark prices in line with our index prices. And this is important because if you want to transact on our exchange, ideally you should have as close of a price to spot prices as possible. So we need arbitrageurs to step in and take the other side of the trades and then hitch themselves into the platform. So we're doing it ourselves at the moment. So we're an arbitrager on our platform, but we're gonna be working with other trading firms to do this as well. So I guess that's the role of a liquidity provider per se. Yeah.
Interesting. Yeah, does anybody else have questions? No.
Yeah. So like, I know like Solana's kind of had like this like great year, and but it's still like a very new project. And you mentioned kind of I guess like shut down in September where they had to like reset everything. Do you guys like like Drift as a team, do you work a lot with the like Solana core team or not really? And if you do, like what is that like I guess working with them and
yeah, that's a great question. Yeah, we're pretty close with the core team. We actually were in their Chicago hacker house just last week, and we launched our mainnet out of their hacker house. So that was really fun. So we work with some of the Bartosz and Jordan to Solana core developers, and they're really responsive whenever these things occur or whenever we need help. So overall, I think we trust that these issues are going to resolve themselves over time as the network grows and as the number of validators grow. And yeah, I mean, with the outage a couple months ago, we thought it was pretty bullish that the whole community came together and patched a bug in a relatively like short amount of time. I know it was longer than it needed to, but it was because the validator set was wide enough that it took a while. So.
And kind of related, do you have any advice for people who want to get ramped up in the Solana ecosystem and maybe start developing on Solana?
Yeah, I think hackathons are probably the best way to get involved. I think Solana just wrapped up another hackathon where I think they had like 500 participants or 500 submissions, which is really cool. And something like a couple hundred K to $1 million in prices. So I think hackathons and just building a product, whatever that is, getting your hands dirty is the best way to get started. If you're a developer, if you're not a developer, I would say getting involved in communities is the best way to get started. I think communities are always looking for community managers as well as business development type people to help spread the word about themselves. So I think, and even like from a product manager point of view, there's a ton of need for product managers in not just Solana, but in crypto at this stage. So I would say if you really like hacking and building things from 0 to 1, join the hackathon. And if you want it and other skill sets, I think the best way to do it is to join an early stage project that you're attracted by and just like provide value where you can. It's really easy to just like hop into a Discord and say, hey guys, I can help with marketing, or I can help with promoting you guys, or I can help with managing and moderating conversation in the community, or I can help you host like a Twitter Spaces, or help you write a research article. Like we've had a lot of inbound from people who just want to help out, and people who really skilled people who reach out and just want to get involved. So we found a lot of goodwill comes from that, and it definitely doesn't go unnoticed. So the team will definitely reward accordingly. So I think that's really like the biggest alpha leak, right? Join a Discord, make yourself useful, and I think the rewards will come. So yeah, I think that's the best way to get started, and then from there, join a project full time or start your own. So yeah, I think that's what I would say.
I think that makes a lot of sense. I mean, because like, it seems like now Ethereum and Solana are sort of the two biggest ecosystems. Like what advice would you give to somebody like where they're trying to decide like whether they should go like full time on Ethereum, Solana, kind of spread their time in between the two? Because you did mention like you were kind of involved in Ethereum before you came to Solana this past
Mhm.
year or so.
Yep. Yep. I mean, oh, sorry, what was the question?
Oh, no, so I was just asking
Oh
like,
yeah, yeah.
yeah, it's like a thought process between like,
Oh yeah.
yeah, like which one you should be spending more time on, like what where you should be building, etc.
Oh, okay. I think both ecosystems are equally robust. Like I think Solana ecosystem is growing faster. And if you sort of like that vibe, I think because Solana is still like relatively, there is a team building on it, and it's a little bit more centralized than Ethereum, that the core team is very separated. You kind of have this sense of like cohesion in the Solana community that I haven't really seen anywhere else. And honestly, the rate of growth of developers entering the Solana community, I think it's like, yeah, I've never seen anything like it before. So I think it's a better ecosystem to be in if you sort of feel like you want to be part of a bigger movement. Whereas I feel like it's not the same vibe on ETH at the moment. Yeah, because I think it's just more established, more projects on it. Solana feels a lot more rocket ship like. So yeah, from a pure vibes perspective, that would be my answer. Yeah.
No, you have another question?
Yeah. So, earlier this summer, I was listening to a talk with Anatoly, and he said that they like you can get smart contracts audited like right away with
Yeah.
Solana, like they like the core team pays for that or something. Is that still the case? And I guess like if you could go into how that works if you're familiar. And then a second thing, like you mentioned, like the cohesion with the core team and that type of thing. And Zaki from Sommelier, he kind of talked about how like Cosmos was kind of more centralized initially, and then they kind of had like a breakup with a lot of the people. And when he started Sommelier, he like everyone was kind of like put on as co-founders,
Mm,
and to kind of like facilitate more of that decentralization.
mm,
Um, and I know that's like the biggest concern with Solana right now is like obviously the team's pretty centralized, and like that's a goal down the line. Um, but yeah, what do you think about that, and is that a concern for you in the future?
mhm.
So I guess that's two questions, but
Yeah. On the audit side, I don't think they're doing that anymore, just because there's been like hundreds of projects coming in. That said, they've been really helpful, just like giving introductions to audit firms. So we're doing our audit with Trail of Bits next year. It's sort of like, yeah, pretty long timeline, but we're okay with that because we're gonna do peer reviews also by people within Solana, just to get things off the ground, and also like deposit limits until we get to that stage. So I think a lot of projects are seeing like a 2-3 month wait for audits at this stage. So yeah, I don't think they're doing that anymore, unfortunately. And the second question was around centralization of teams in the Solana space. So I think like for individual teams, you sort of have a very extreme approach. Like for instance, Mango has taken a very like DAO-esque approach, right? Where every single decision that they make is voted on by the community, by token holders. So even things like, you know, paying for RPC providers out of the treasury, or paying themselves are all decisions that are governed by the token holders. And on the other side of the spectrum, you have, I guess, like teams that are smaller. They only plan to decentralize within like a year or two, but they make all the core decisions on themselves. So I think there's like advantages to disadvantages of this, but I think that it's okay for teams to be centralized early on because it makes decision making much faster, and that just makes it easier to grow and to innovate earlier on when you sort of don't have to do like a quorum with every with every token holder. That said, I do think and believe that bringing bringing protocols into the hands of the communities and the hands of the people who actually use the protocol is the most important thing. But you don't want a sort of like leadership vacuum when the core team leaves, right? So when the core team is like becoming less involved in the project and the decisions are made more by the community. So I think it's important that token holders also take time. It takes time to identify, like, I guess from a democratic point of view, like token holders who care enough and know enough about the protocol to actually get involved. So we think that really happens over like a 2-3 year timeline. And we're sort of at like month 6 of like Solana DApp Cambrian explosion. So I think it's still early, and it's in my opinion, it's okay for teams to be centralized early on.
Thanks so much, Cindy. Appreciate all these responses.
Of course. Thanks so much for your questions.
Yeah. If nobody else has questions, I think, yeah, we can end here right at time. Yeah, thanks so much for giving us kind of intro and drift and answering everybody's questions. I think it was really interesting. And it's great to kind of, I mean, a lot of focus is kind of on Ethereum. So it's great to get more, see what's happening in other ecosystems, especially Solana, just because it's becoming super relevant nowadays. So
yeah. Thanks, guys. I know it's a Saturday, so
yeah.
hope you guys can have some fun.